Well, hey everybody, happy Father's Day weekend. It's Friday, and it's Friday Live with HBK Provident. Colin Harper, joined by my father, David Harper, who we teased a little bit earlier. We're going to have two special guests. He's actually up here visiting his new granddaughter. So our second special guest, who is going to tag along, my grandfather, Ron, wasn't able to attend today. So unfortunately, we only have one special guest, but I think you will learn quickly that one is plenty.
Are you saying I'm not a special guest?
Ouch.
Mike, you're always a special guest, but you're the constant special guest, so no trouble there. So Mike, I heard we got CPI, PPI, retail sales, and the Fed meeting. It's an exciting week over there.
Busy week.
Is that all?
That's all. Only four things to chat about.
Yeah, it's certainly jam-packed with market-moving economic data. Everything came pretty decent.
And just a quick note, nothing here is a recommendation, a specific advice to your situation. Always consult your trusted financial professional, with which, if it's not us, I'm biased, but I'm happy to make a case for. So, we're happy to answer any questions you may have after this little Friday Live here. So, Mike, fire away, man. Sorry.
Yeah, so all the data was pretty decent. The first one was the CPI number, that inflation gauge came out on Tuesday. It was pretty close to estimates. Headline dipped down to 4% from 4.9%. Core is a little stickier at 5.3. That was a tenth higher than expectations. Then following day, we got PPI that also came in a little lower than expectations. And then the much anticipated Fed meeting. So we got what everyone's calling a very hawkish pause. And what I mean by that is they didn't raise rates for the first time in 10 consecutive meetings. So they kept the Fed funds rate at between 5 and 5.25, but they moved up their terminal rate, meaning where they're going to go on the Fed funds rate, to 5.75 on the high end. So that means they are anticipating two more rate hikes, whether we get one in July or if we get one at all. A lot of people, including what the market seems to be saying, is we don't believe you. You're not doing that. And then retail sales also came in pretty decent. It was the second consecutive month of gains. So moving in the right direction. I don't know if it's sustainable or not, but I think we're kind of in a runway over the next month where there shouldn't be any economic data that really sets the markets off a cliff. I think inflation is going to continue to come down in the next month's reading. I don't think we'll really see huge dents in the labor market over the next month, although jobless claims are creeping up a little bit. They came in at 260,000 for the second consecutive week. So that's a trend you don't really want to see if you expect the jobs market to continue to be strong. But the stock market certainly continues to rally, and it's the second consecutive week where we've seen a broadening out of the breadth, meaning not just those eight biggest stocks are carrying the market. Now the other areas are starting to pick up some steam too. So that's a healthy sign, but it is a very overbought market. I think it's the highest relative strength measure we've had since November of 2021. And that didn't lead to healthy results over the next 6 months. So I don't think we'll see that again, barring a severe recession, but we could be expecting a little bit of a pullback here.
Wow. Okay.
Well, to say that the economy and the stock market is a little disconnected, maybe an understatement.
Yeah, I was actually thinking about that this morning. I'm like, if you told me at the beginning of the year all the different metrics, you had like 3 out of 5 retail sales reports negative, the Fed getting to a terminal rate potentially of 5.75, the equity market trading at a 19 times multiple, I would say no. It's not a healthy environment. Manufacturing's in a recession. Housing's been in decline all year, but stock market shakes it off.
Well, and yet there's still so much money on the sidelines too.
That's the thing. You still have like record short positions by hedge funds, record highs in money market funds. So, I mean, there is the potential that money comes off the sidelines and really continues the bull run here. I think that's the most bullish potential catalyst.
Yeah. I mean, as much like, so you guys are looking from the science side of things, and I'll tell you a little story and I'll look at it from my side. I just think, I was picking David up at the airport earlier this week, and I have never seen the Pittsburgh airport parking lot as full as it is right now. I mean, it was unbelievable how many cars were at the Pittsburgh airport. I think that might have something to do with construction, but I think a lot of people are, they're enjoying this summer. It's been a really long, the longest in my career I can remember of like a negative news cycle. And it just seems like again and again and again, we've had a pretty negative news cycle for the last year plus. I mean, since COVID, really, I feel like. So I think the market and everyone at Pittsburgh Airport just want to take a little vacation and not care what the economy's doing. That's my theory on the whole thing here. But it is puzzling how disjointed the economy and the market are. And then, Mike, like you said, just looking at the statistics of it, it's something. It's going to be an interesting market to navigate coming forward, and that's why kind of long-term planning has such an important impact on what we do. So, on that theme, Mike, anything else you want to touch on from
I was just going to say, I think it ultimately came down to that excess savings that was built up in the consumer bank account taking longer to work its way out of the system back to normal than everyone anticipated, as well as on the corporate side of all those corporations refinancing their debt at near zero-term interest rates. So monetary policy may not work at least as quick as it has historically.
Well, there seemed to be a pause in consumer spending, but that has picked up for the summer, it seems, right? I mean, there was a little bit of a pause. So much of our economy is based on consumer spending.
Mm-hmm. Yeah, it's about 2/3, I believe.
Intriguing.
It is.
So welcome to HBK Friday Live, where we have none of the answers and all the jokes. So we'll kind of continue on the planning.
That's how I felt about after last week, or maybe it was 2 weeks ago, where it was just like, I feel like I just gave a lot of like potential things out there, like no real discrete like opinions.
Well, I mean, I think it's, we talk about our long-term, all the decisions we make are long-term focused, right? So what we talk about here every Friday, these week-to-week and day-to-day movements, they matter, but they are a smaller part of an overall bigger picture. And the bigger picture kind of fits with our clients we work with. It starts with the financial planning and then moves into the Mike side of it, the portfolio management side of it. And I think what people get bogged down. We get bogged down too in the day-to-day and the, week-to-week cycles and movement of the market, when really that's not necessarily what matters. What matters is more of the 5, 10 plus year focus. So I think it's important, especially in negative news cycles, to really focus out on those longer term perspectives. But, so speaking of shifting from the day-to-day, the portfolio management side of it into the longer term planning, I'm going to put David on the spot here. And so this was our topic for the week is, Father's Day and fatherly advice about finances. I didn't ask him about this before, so we'll see what he comes up with. But if you had to pick 3 things, start with 1 if you can't get 3. If you had to pick 3 pieces of advice to give your fatherly financial wisdom, and I'm sure I've heard most of it and didn't listen to any of it, what would that be?
I have a couple stories, but I'll keep them short.
That's good.
Okay.
Yeah.
Because I can get a little lengthy in stories. Okay. One thing that keeps it, number 1, live within your means. Some people believe they can just work harder and get more income. That's not as easy.
Well, it works until it doesn't.
Yes. Most people live as though they can always work harder to get more money to pay their bills, that they've pushed out those furnitures out for, you purchase those furniture.
Like 0% APR couch for 24 months or whatever, things like that.
Yes. And then you have the bill comes due and they're like, oh, what do we do? Oh, we switch it to another 0% credit card. And you keep kicking that can down the road, and pretty soon you're in your 50s and you're in your 60s, and you've got to be able to retire here and not work at a fast food restaurant when you're 70. So live within your means is obviously the very number one advice I have for you.
Makes perfect sense.
Okay. I used to have this story when we would go out that I would tell the waitress, look at this little nickel. This little nickel is a really strong, powerful tool. And she looked at me and said, "What?" I said, this nickel in my hand.
You didn't throw it.
Do a whole lot.
Yeah, you weren't going to throw it at her, were you?
No,
Okay.
no,
And
she
that's
wasn't
not the tip,
threatening.
is it?
Okay. I said, but this nickel in my son's pocket burns a hole in his pocket.
That's true.
So be mindful of your spending. Point number 2.
Don't let the
You'd be
nickels
surprised.
burn holes in your pockets. That's fair.
Yeah, get the quarters at least. Okay, but advice number 2: be aware of your spending. Okay, if you need to, I know we talked about budgeting last week, but if you need to, get a ledger and write down so that you are the master of your finances and not letting finances master you. That is very important.
I think it's very important. But what would you say to the people? And I have an answer for this too. What would you say to the people who said it's too hard to budget? I don't want to budget. It never works. My spouse hates me every time we talk about it. What would you say to those folks who have a hard time with the budgeting aspect of it?
Sometimes a change of semantics work. You
Yeah.
change the name and say, let's talk about a spending plan. Oh, I like spending.
Yeah.
Okay, let's have a plan for spending.
So call it something better than budgeting.
Well, it's still the same thing
It's still the
from a
same
financial perspective.
Yeah.
But for the human psyche,
I like that. The spending plan.
maybe the spending plan.
I'm really good at spending money. I should start calling it the spending plan. That's perfect.
Okay.
Look at that. I'm sitting here. I've heard this my whole life, and I'm still getting fatherly wisdom. So,
Oh, third one.
all right, let's see here.
Third one. Life happens, but don't forget to invest and save and enjoy life. Now, I remember a time after Colin spent a summer in Wyoming, and I wanted to enjoy his expertise on camping. And so we decided to do Apicula Falls to go up to.
It's the southernmost start of the Appalachian Trail up in Georgia.
Yes. And so I've always had a bucket list to get to the Appalachian Trail. And I didn't realize that southern terminus, the beginning of it, took us 9 miles to get to the southern terminus through the wilderness. We got to 9 miles. We only walked maybe a couple 100 yards on the Appalachian Trail, though.
Exactly.
But I accomplished my enough for my bucket list from my perspective. And I remember Colin telling me, and as we're going on that 9 miles, I keep seeing poison ivy to the right and to the left, and I'm trying my best to stay on the path that I wouldn't get to poison ivy, and point out to Colin. And Colin said, "Dad, remember, we're on a hike. Don't forget to look at the scenery." And I had to take off my myopic vision, that short-term vision, and look at the longer-term vision that we need so much with financial planning. Look at the long-term and see the landscape. Don't forget to enjoy the journey, not just the journey itself. Life happens. Make sure you save and pay down debt, but do all 3 of those at the same time.
Perfect.
Does that count as a 6 advice?
Well, we'll lump it under 3. I think there are a lot of different moving parts there, but we will. I'd say you did a pretty good job keeping it concise for.
For you.
So yeah, great job. For you did a great job. Yeah. So I'll share my 3 or 1 or 2. We'll see how far we get here. But I would say
a dad of 2.
I am a dad of 2 now, so I'm entitled to impart fatherly wisdom, although mine are too little to listen, and they won't when they're old enough anyway. So so I would say number 1.
Karma.
Yeah, no kidding. So I would say my number 1 would be spend money on experiences, not things. I think often we get bogged down in having the newest car or, a nice watch. I don't know what my wife spends money on. I spend money on all my hobbies, like, the newest mountain bike, some stuff like that. But we often don't spend money on experiences and spending time with our family. So I would say spend money on experiences, not things. Spend money on things too. You got to eat and everything, but spend money on experiences. Two would be, have an emergency fund, right? Life throws nasty surprises your way quite frequently, and you don't want to go deplete your savings not being properly prepared. So have an emergency fund, 3 to 6 months of living expenses. That would be my number two, kind of something pretty easy to check off, and I would make it a priority if you're not there yet. Three, I'll share yours. Oftentimes, retirement planning is a very long-term focused thing, right? It's, sometimes if we're working with somebody my age, we're, 30 plus years from retirement. David's a lot closer. I won't divulge how close, but much closer in age wise, not in work capacity. We're still going to keep them slaving away for many years here. But I'll share one with you, right? It's, the number one rule of backpacking is don't forget to look around, right? And number one, I'd say one of the big rules of financial planning for me too is don't forget to enjoy your current stage of life, right? There's something to be said about squirreling money away for a rainy day and retirement. But if you don't enjoy it along the way, there's, what point is having resources and being blessed with wealth if you don't use it to better your family and those around you along the way? So those would be my three. Mike, not a dad, but a dog dad. Do you have any specific advice you would like to impart?
Make sure you have enough dog biscuits.
Have dogs, not children. No, I'm just kidding.
Mike's found the real secret to wealth. It's have dogs, not kids.
I'll go opposite on that spending. Buy assets that appreciate.
Okay.
Houses, stocks, that sort of thing. And I don't know. Number three, find hobbies that are exhilarating.
I love it. Well, thanks everybody for joining us. We do this every Friday, different topic every week. Mike talks about the markets. We talk about a little bit of financial planning. I like to have some laughs along the way. Feel free to share this with your friends. We'd love to have some more viewers here every week. But in the meantime,
I'd like to give a little bit other piece.
Okay.
Real quick. We stand on the shoulders of giants. I really want to give kudos and pieces. Our legacy goes back to almost 70 years with Ricky Ferguel, who started in 1954. And my father-in-law, who was unfortunately, we weren't able to get on this piece, he started in 1957. And Jack Delaney started in 1959. We have Argel Shingleton, Russell Bonasso. We had Dominic Ravati. Frank Silvestri. We had so many giants that put us in the piece. And they've always had that same mantra of living within your means, invest the difference, and invest in your lives of your family. And that's sage advice. And it goes throughout the years. And I want to say that we've had a long legacy of doing great things for good people. And
perfect. I think that's a great reflection on some of the fathers of this firm, so to say, that have came before us. So yeah, always cool to kind of look back at the history and see that and how it ties into the present day. In the meantime, everybody stay safe, stay happy, stay active out there, and we can't wait to talk to you next week. And a very happy Father's Day to all those fathers out there. Mike, thanks for joining us as always. Enjoy the sunshine. We're going to enjoy the rain. Have a great weekend.